Welcome back, everyone. This is a brief update on news from the oil market. Crude oil prices moved downward yesterday, giving back all the gains it had made on Tuesday. The commodity has moved in a small range of prices in the latest sessions, and the price action has not been very satisfying for traders. Yesterday, we got the EIA weekly crude oil stocks figure, which indicated a minus 11 million barrel drawdown. This was the sixth consecutive drawdown released since the 19th of June 2019. Despite being the second largest drawdown among the last six for the EIA, oil prices did not react significantly upon release. The commodity initially added 50 cents on the dollar and then quickly dropped back. Market reaction during drawdown releases usually sends oil prices higher as they indicate supply could be running out. On the contrary, yesterday oil prices dipped, and so we will have to look for other drivers that motivated traders to sell the commodity. News from the Middle East finds OPEC members Kuwait and Saudi Arabia are in talks to form a new collaboration. The two countries keep a neutral zone between them that they can jointly use for oil extraction. This area was used in the past to extract oil, but the two nations stopped using it due to a disagreement on how to manage the territory. However, they are now in talks to restart production, which leads us to the conclusion that this could be increasing oil output for both nations, as the oil fields in the neutral zone are equally divided. The market may have perceived the action as a future boost of supply, yet the compliance levels led to production cuts both countries have in place allow space for extra glut to be stored. So in our view, this is not a big event for the oil market, but could have been the market mover for oil prices yesterday. French oil company Total is apparently looking for ways to cut its costs. The firm initially announced a drop in its net profit compared to last year. This could be due to persisting low prices. When demand is not picking up, oil firms usually adjust their budgets in order to sustain losses and carry forward its potential to produce more when more is demanded. Total is also said to be selling assets worth approximately $5 billion. We have come across similar circumstances in the past with our research, and it's natural for oil firms to make adjustments during difficult market times, as the cost of continuing to operate at high levels could be devastating. Cutting costs could be important for survival. On another front, the very impressive run Saudi Aramco has made as per its investments in the oil market continues to wow market participants. Reports show the oil giant has invested in Saudi Arabia, Asia, and the United States. Yet its plans for future are even more striking, as it is making adjustments to uplift its chemical production to phenomenal levels in the next 10 years, while at the same time it aims to double its global refining capacity. The main idea Aramco has is to diversify in all markets it can in order to be able to use multiple streams of income, making it unaffected from market swings of oil demand. However, despite the large investments the firm has undertaken in order to grow, it seems they are more interested in advancing gradually. This could prove to be very wise, as the firm would need to be prepared prior to undertaking intense global activity. As a conclusion, OPEC Plus members announced they will be meeting in September for a review of the market developments. We suppose by observing the market, they will be able to determine if their current approach is correct. However, in our opinion, if the market circumstances change, then the group could be forced to adjust accordingly. For a more in-depth investigation, please refer to our written report, which also includes technical analysis. For more information and trading ideas, you can visit our webpage, follow us on Twitter, like us on Facebook, or subscribe to our YouTube channel. This is Angelos Zitis from IronFX, wishing you solid trading.